people, welcome back. So now we'll be starting with new topic, that is overview of accounting standards. All right, some accounting standards are there in your currently in your group 1 accounting syllabus, and some are there in your group 2 syllabus, and a few standards have not bought at inter level. They have been exclusively, you'll be studying only at CA final level. All right. So yes, this is a very interesting topic. Okay, and in your CA final, you don't have any other topic. As I mentioned, standards are the only topics that you have as of now, the way things stands. Okay. All right. So I've been telling about accounting standards now. What is an accounting standard?
We should maintain while preparing accounts.
Standard we should maintain while preparing accounts. Okay. Guma firake, you use these two words, brought in some more syllabus and made a sentence and throw it back. Okay. Anybody else with any other perspective?
Accounting is a written policy document so that we can compare easily.
Correct. It's as given over here. It's a written policy documents issued by the government of India. Basically, these are, as he clearly pointed out, it is nothing but some rules which will guide us through our accounting or as to how to do the accounting things. Okay, simple. It's a rule, right? Just to help to make the accounting process a little better or little easy. Okay. Now, why do you think accounting standard is required? First of all, we have golden rules of accounting. Isn't it that sufficient to do accounting? Why was accounting standard even necessary in the first place?
For additional information.
Additional information. Okay, additional information means the things that you give in notes to accounts. So that means you need not form so much standard, no? Some of the standards are not too big, sir. Alright, I don't want to scare you now, but some of the things are quite big and it may take like almost 15-20 hours for just one standard. Not even talking everything, just one. Why so much content just for disclosure? Additional information.
Accounting only gives the better format for
1 minute.
only gives the format how to present. But accounting standard will give the guidelines how to prepare.
How to prepare financial statement is not given by accounting standard. Companies Act gives that. Financial statement is prepared as per the format given by Companies Act 2013. So format accounting standard does not give you. That anyway, golden rules gives, no? Debit to credit to this to that to. That is accounting, no? Let me see if maybe it deals with all aspects of accounting, sir, rather than just the basics. Nice. Then if there is no accounting standards, company will do wish valuation. They'll do whatever they want, it seems. Okay, if there is no accounting standard, he typed the same thing again. Okay. Yeah. Anybody else with any other perspective?
Financial statements reflect true and fair.
To show whether the financial statements are reflecting true and fair. Golden rules gives the same, no? If you follow golden rules, that means you're following accounting rules only, no? So that means, isn't that sufficient enough? My question is, why is this really required?
Everyone will prepare using golden accounting standards. For their which they will prepare.
But we have rule already, no? See, as per nominal account rule, expenses should be debited. Can I credit it? My wish bol ke, can I credit it? No, I have to debit it only because that is a clear rule. For real accounts, we have a rule. For nominal accounts, we have a rule. For personal accounts, we have a clear laid down rules. And debit side component of ledger, can you post it on credit side saying my mercy? No, it has to be done like that only. That is not possible, right? Because these are predefined rules which every company are required to follow. Then why one more?
Sir, because there are some areas where
We need AS as required by law, sir, to compare with other organizations, sir. We compare financial statements. We don't compare accounting standards with other organizations. We compare financial statements of one company with financial statements of other company.
to compare.
Correct. Go on. I'm just reading. Go on.
To compare, both the accountants should have followed the same rules. Both the accounting standards.
Correct. People are right only. Papa. And then next they will throw things at me. Hey, go on. How much to tell? No, he is going on. We are also telling he is also going. Correct. Go on, sir.
According standard, there are some areas where the golden rules will not.
Perfect. That is the point I was looking for. Sir, yes, golden rules are quite comprehensive. Nobody is debating on that. All right. But things have drastically changed. Accounting is not black and white as you used to be before. Now there are different shades of things. Just to give you a little example, let's take, maybe I think I can give you 100 example. I'll just stick to the one which probably like we can relate to. Depreciation, we know. Depreciation, left, right, center, we know. Method also we know. The way of accounting also we know. Charge method, provision for depreciation method. Two methods there. Can you tell me the two popular methods of calculating depreciation, not accounting, calculating? Generally we use straight line method, or we go for WDV or written down value or diminishing balance or whatever method. Correct? Which one should company follow? SLM or WDV? WDV, yeah. Sir, we have studied income tax rules, sir. They told that power generating units only can follow SLM. Other units have to follow WDV. So we select WDV. That is Income Tax Act of 1961 ka rules. Is there any accounting rule saying straight line method cannot be followed? In fact, if that is the case, means why we have seen in so many problems, SLM, bolke so much of problem we have done now. Correct? Now you tell me, which one should the company follow? Anything. So that means there is a little ambiguity there. Correct, right? There has to be some predefined metrics to select one. Correct. These are methods, but left, right, center, you cannot choose the method. There has to be some basis for it. Accounting standard 10 gives you the guidance on this. We'll not talk about AS10 for the time being. When we come to AS10, I'll tell you how the choice has to be made. There are certain metrics. AS10 does not say you choose this only. It gives you a parameter for selecting the methods. Got it, everyone? Like this, for few areas, as he clearly pointed out, your golden rules or your existing rules are not sufficient. We needed some extra guidance, and that is where the role of accounting standard came into picture. In fact, there are so many areas where you don't know what to do with accounting at all. Just to give you, if you want one more thing over here, sir, asset you will show it at book value. Okay. Let's say you bought a land for, let's say 10 lakh rupees. Land, will you depreciate? Huh? No. So you bought it for how much? 10 lakh. That means what is your book value? 10 lakhs only. Clear? Let's say the market value of this land is 1 crore now. When you bought it few years back, its value was 10 lakh. Now its value has become 1 crore. 1 zero only got added. Okay. Not by mistake, actually. Full happy. Now the question is, should you show land in your accounting records at 10 lakh or should you show it at market value of 1 crore? Should we follow basically book value or should we go for market value? This is okay. Again, this AS10 talks about this. Our golden rule, is it answering this question? Is it okay? Like this, there are many areas for which you don't have a clear-cut guidelines. That's the reason standard was required and they have brought it. We have many standards. Some will be learning it now. A lot more of it will come next stage. Very nice, because standard question, you don't have to do that debit to credit and all. It's mostly what, like a case study. You just need to know the provision. They'll give you a case. You just have to interpret it and say whether the company is doing it right or they're doing it wrong. So that's where the interpretation of skills of a chartered accountant comes into picture. So your future bread and butter will be accounting standards, its implementation, its interpretation, like this. Okay, these are the areas for which under accounting rules you will generally be hired as consultants. Got it, everybody? So you got to know the need, because the simple need was existing rules are not sufficient because things have become too much dynamic. Okay, so that extra rules is given under accounting standards. First observation. Okay, na sir? All right. Now, accounting standard, no, left to them, Ind AS, something like that typing. Okay, leave, welcome to Ind AS and all, not now, da. We'll say it later. That's CA final. Why are you talking Ind AS? You read the topic before, huh? Okay. Sir, accounting standards, no, every standard for that matter. There are, I think, about 32 standards was rolled out initially. Few have been withdrawn, few have got merged. Okay, so that means we have around somebody probably 27 or 28 roughly standards. Okay, you have around probably around 20 standards in your inter syllabus. Few standards are quite complex. They thought let's not test it at inter level, so they've kept it at final level only. Okay, final level may you have almost 45-50 plus standards which will be learning across. So coming back, standard covers only 4 areas. Any accounting standard for that matter covers only 4 areas: recognition, measurement, presentation, disclosure. That's all. Only 4 things: recognition, measurement, presentation, disclosure. That's all. Any standard for that matter. Got it? That's all. These are the only 4 areas which a standard talks about. It's all given in your books. You can just underline or listen to me. That's all right. Okay. Now, what does this mean? So let's take an example and try to cover what is that particular 4 feature that a standard is trying to cover. Okay, people? All right. Sir, what's your name? Ashutosh. Okay. Spelling correct, macha? H-U-T-O-S-H. All right. Take my name also. Next time I'll take macha. All right. Sir, Ashutosh, no, he's been attending my class. I don't know why. Someday he got fed up, sir. And he filed a legal case against me, sir. This guy doesn't teach well only. I want compensation of 10 lakh rupees. His paid fees of 5,000 and demanding a compensation of how much? 10 lakh rupees. Time waste, time barbad kar diya. This guy is waste and all. And bolke he has filed a case for how much? 10 lakh. Example da. Don't file and all. Okay. All right. Sir, you're giving ideas, sir. Sorry?
Sir, can we file?
Can we file? You can file, but it will be dishonored. All right. So, a person, or we can take it as Ashutosh Limited, has filed a case against Sandesh Limited, demanding a compensation of how much? 10 lakh rupees. Whatever the reason. Okay. Whatever the reason, and he's demanding a compensation of 10 lakh. Now, the question is, in my books, should I have to recognize this? He has filed a case means, and the battle is going on in court now. Should I recognize this or not? What do you think? Huh? Sorry, yes, 29 will say that, sir. Okay. Yeah. You got the first draw area or gray area which standard is trying to target? To recognize a component or not to recognize a component. To recognize means, should you have to pass any journal entry for it? Will that particular component come in your P&L or in your balance sheet? Basically, in your accounting records, should this particular component get recognized or it should not get recognized? That is the first area standard tries to cover. Any standard for that matter. To recognize something or not to recognize something. Did you understand the meaning of the word recognition now? Everybody okay? What is the second area I told? Measurement. The second area which any standard talks about is measurement. Okay, you decided that you have to recognize. You applied some rules. AS29 talks about all this stuff. We'll see it later. Let's say, as per AS29, first criteria is met. It said you go ahead and recognize. So the next question will be what? Should we recognize it at 10 lakh only, or should we recognize it at a different amount? Lesser value or a higher value? That is the second area which standard gives you guidance on. If at all you say yes, account it. Second question will be how much to account it for. That is your measurement criteria. Got the second aspect? Any confusion? No? Alright. So how and all this happens, don't worry. We'll study all this in AS29. Okay. I'm just giving you an overview as to what standard is trying to cover up. That's all. Alright. Recognition, measurement, presentation and disclosure. Correct? Maybe I'll write off all the 4. These are the 4 areas which standard is trying to cover. Presentation means, okay, you decided that you want to, you have to recognize. Next area may you recognize how much you should recognize it at. Let's say you came to a conclusion that it should be recognized at 5 lakh. How 5 lakh and all, don't worry. No. Okay, let's say you have to, or maybe let's take it as 10 lakh only. How much I've taken 10, no? Let's say you have to recognize it at 10 lakh only. Alright, this 10 lakh you have to show it somewhere. No, that is your presentation aspect. Where should you show this 10 lakh? In P&L or in balance sheet? If at all you say balance sheet, which side? Asset side, liability side. If at all you say it's liability side, you will show it as a current liability or whether you will show it as a non-current liability. That is your presentation matter which standard gives you the guidance. Okay, everyone? Got it? Yes? This is a third aspect. Alright, last aspect is what? disclosure. Disclosure means it is given in notes to accounts. We have done anyway few balance sheet extracts if you remember already. So we prepared some notes also. If you remember bonus shares when we had done, I told you you need to disclose number of shares issued for consideration other than cash. That is an additional information given, no? Like this, every standard also tells should you have to give any particular extra information relating to a particular thing. This is a case, no? If you just show it as a liability in balance sheet 10 lakh rupees, will the reader of balance sheet get to know anything about this? See, you as an accountant or you as management will have information about this, so you will know. If I just give it to some third party, will he be able to understand what is this 10 lakh, why is it coming in, all that hell, all those things, will he be able to understand? No. That means you have to give what? Some extra information. That is the disclosure aspect which the standards target. So relating to this, what extra information you have to give? Like that a particular standard will tell you. Alright. So that's all any standard for that matter covers. Recognition, measurement, presentation, disclosure. Okay. Some standards are purely disclosure based. Some covers all the four things like this. Standard to standard, it varies, but broad area of every standard is only 4. That's all. Any questions you have for me? Don't worry about what to do all this stuff. Okay. I was not talking about AS 29 here. I was just trying to explain what does each component mean. When we go to AS 29, we will cover all this stuff, how you need to recognize how much and all, we'll go there. Shortcut is DMRP. Yeah, okay. You order shortcut. That's fine. It's easy only, no? Recognition, measurement, presentation, disclosure. What is the big deal in that? 4 components. Okay. Sorry, sir.
Logic.
What logic da? Correct. It's following in a particular order only. Recognize or not to recognize. Second one is measurement. To recognize means at what value. Then if you want to show it means where. That is your presentation. Then should we have to give some extra information that covers under disclosure aspect. Okay. So these are the 4 areas accounting standard deals with. Can I tick off this also? Yes. Okay. Disclosure is for notes to accounts only, sir? Yes. Disclosure aspect generally we give it in notes to accounts. Alright. Next is what are the benefits of accounting standards? There are many benefits. One major thing they have called out is, one, sir, it will make the standardization of accounts, meaning most of them will follow the same things. Accounting standards are rules. Can you go against the rules? If accounting standard says you have to recognize something, can you say no, I will not do? No, you have to recognize it. That means accounts will become, or financial statements will become standardized because everyone is doing the same thing. That is one of the benefits of accounting standards. Then 2, sir, you have some money with you. You are thinking whether to buy Wipro ka shares or Infosys ka shares. Okay. Let's not talk about current market conditions. Okay. So Wipro ka shares or Infosys ka shares. On what basis will you decide that? Company's future. To analyze that, you use company ka financial statements. Yes, no, you will analyze 2 company ka financial statement, study it, then take a decision whether you want to invest in Wipro or in Infosys. For that, financial statements should be comparable. No? If Wipro is doing their own thing, Infosys is doing their own thing, can you compare them and take a rational decision? Not possible. So with accounting standards are rules. So if each company is following this rule, financial statement will become comparable. So you can compare and accordingly take whatever decisions that you really want to do. Got it? And the other aspect is accounting standard also targets the disclosure element. What do we mean by disclosure, sir?
No, sure.
It is some additional information given. Correct, no? When you give additional information, users will understand financial statements better. Correct, no? Because with extra data, you'll understand. Suppose I just told you accounting standard covers only 4 things. Recognition, measurement, presentation, disclosure. 4 times I made you repeat the same sentence and moved on without giving this example. Would you have understood that better? Correct, no? Okay, like that. So when accounting standard talks about additional disclosures, it gives you extra information. With extra information, you will be able to understand financial statements better. That's one of the advantages. Got it, sir? Yes. So these are some advantages of accounting. Oh, standard. Oh. So this is full theory, sir? No. Few things. That's all. Interesting. Don't worry. Next is, sir, who sets up these accounting standards? Who takes the lead role in setting up the standard? Our mother body, that is ICAI. In India, the lead role or the responsibility of drafting the standard and all is taken up by Institute of Chartered Accountants of India. So how the standard setting process works is, in ICAI, there is a board called Accounting Standards Board, ASB they say. There is a board called as Accounting Standard, just like you have board of studies. You have board of studies. They take care of your syllabus, examination, how much to conduct, passing marks, and all this criteria is defined by that board of studies, right? Similarly, we have a department known as Accounting Standards Board. So ASB is primarily responsible for setting up the standards. Got it, everyone? So how it works is, ASB will consist of members, like whoever is qualified, right? Chartered accountants. Some chartered accountants with the relevant experience and expertise will be appointed in this board. Every Tom, Dick and Harry will not get in, okay? Obviously need a certain amount of experience and knowledge as well, because these are all what, sir? These are all gazetted documents. Once it's declared by ICAI, means it's applicable all over India and it has a lot of weightage. Every Tom, Dick and Harry cannot go into it, okay? So you just have to, if you have the relevant knowledge, you can apply, and then they will review it, have an interview and all that process, and formally you will be probably got it, okay? So let's not worry about how we can get in and all this stuff. So Accounting Standard Board is primarily responsible for framing the standard. They will have some members, just like you and I are chit-chatting now. Those group members one fine day will catch over the chai pani and discuss what are the areas for which we need to form standards. What are the areas for which there is ambiguity, they will discuss. So for that area, they will form a standard. Suppose in lease accounting, there is a ambiguity. They formed Accounting Standard 19 for it, Ind AS 116 for it. Ambiguity means confusion. If there is any confusion or there is a lack of clarity, right? That area they will identify, and that for that area they will derive or they will form an accounting standard. So that's the first step. ASB will meet up and identify the areas for which you need, first of all, accounting standards. Okay, people? All right. Next, ASB also, then ASB will consist of all your top members. I say past president, council members. Do you think they will have time to kind of form the standards? No. ASB will in turn form a smaller study group. They will form, okay? That study group will consist of members with a relevant industry experience as well as the knowledge. So they will start forming the standards for those areas. ASB will identify the areas and the study group of ASB will start formulating the standard for it. Like if they feel gray area is leases, then for leases, what and all should be done? They will start thinking how from the beginning till the end, how the accounting treatment should go. If this happens, what to do? Like COVID came. When COVID hit, in fact, there was an amendment in leases just because of COVID. That amendment only was almost like it took me 4 hours to cover amendment. That's amendment class only. Okay, because due to amendment, if you remember, all the leases, people used to pay that lease or lease relaxation was given. Lease relaxation was given. Agreements were modified. So original agreement was there or it got modified. But your existing accounting was done under original agreement. Is original agreement there now or got modified? Got modified. So how should we account that? There was a provision known as lease modification in Ind AS 116, but that has a retrospective implication for which you have to collect a lot of data. But this is a problem faced by almost every entity and due to an unprecedented event known as COVID. Now, can you put the fault on every organization and say you do it from the beginning? Will that be a fair measure? No, that means they have to bring in some relaxation for that area. Due to COVID, they modified some rules and brought in some extra areas. Okay, so these are the things which ASB will formulate. They will think what are the gray areas, how the standard should be formed. They will think from beginning to end. The moment you start reading those standards, you will appreciate, my God, these guys are literally geniuses. Seriously, if you just go through the standards and all, the unbelievable amount of thought process that has gone into formulation and how much they have thought, it's just unbelievable. Okay, superb. The way things stands now, it's amazing. I enjoy teaching at CA final level because of this, that thought process. This happens, that happens. You would have never even thought this can happen now. That much they have thought and formed the standard. That is the reason standards are a little lengthier, but they are all interesting because it's all based on practicality and case study. No mug up, gig up and all. It's all absolutely related to our day-to-day world. So CA final syllabus of accounts is almost your day-to-day work. Whatever you see practically only, you will, it's literally been brought in as well. Okay. Can I become ESB members? No. Let's see that later now. I've not applied for it. I'm not sure whether they'll consider also. That's for another area. Okay, so you got the area now. So ASB will form a small study group and they will start working on the standards. Once the standard is worked upon and the draft is formed, they will send that draft document to all the stakeholders. Stakeholders means all the CAs. All of us will get a mail notification saying we have formed this particular standard. This is a draft. If you have any comments, please give. Okay, like this, it will be sent out to all the chartered accountants, Securities Exchange Board of India, Ministry of Corporate Affairs. Okay, like this, many agencies may draft a letter or draft standard will be sent for saying if you have any comments, please do give. If it is reasonable, we can consider that. Like this, the draft will be sent out. If they receive any comments, then the standards again will be revised after considering those comments, and the final draft will be issued by ICAI. Final draft will be issued by ICAI. But if it is a corporate entity, corporate entities are regulated by Ministry of Corporate Affairs. So in that case, this final draft, ICAI will give it to MCA. They will approve it. Once MCA approves it, it becomes full and final. Is it okay? So the responsibility of issuing the final standard in case of company lies with MCA. For all other entities like partnership firm, sole proprietor, ICAI only is responsible for issuing the standards. Basically, for non-corporate entities, it is standards are published by ICAI, because partnership firm and all will come under the ambit of MCA. No. So that means ICAI will release the same standard only, but the releasing authority will be ICAI for non-corporate entities. For corporate entities, it will be MCA. That's all. So this is how a broad standard process comes into picture. Everybody got it? Clear? Not that these are all that much important, but just discussing a few things with you. Okay, people? Alright, let's have a quick recap since this dwells a lot around with the theory concepts. Let's keep having that frequent recap so that let's learn this topic also in the class only. So standards are nothing but certain rules, policy documents. Alright, they help you in what? Doing the accounting better. Right? This is the first thing. Standard only covers 4 things. What are those 4 things? Recognition, measurement, presentation, disclosure. Only 4 things. Okay, these are the broad areas which every standard tries to target. Benefits of accounting standard is one, it standardizes the account. It makes the financial statements comparable. And because of this additional disclosure, you'll be able to understand and interpret financial statements better. So some of the advantages. Standard setting processes. First of all, whose responsibility is it? Who have taken the lead in AS? Accounting standard, henceforth we'll call it as AS. Okay, AS a lead is taken by ICAI. ICAI has a board known as, or a body known as Accounting Standards Board, ASP. Okay, they identify basically what are the areas for which you need the standard. After identifying the area, they'll form a small study circle, some members who have relevant experience, and they will start working towards forming the standards. Once the standard is set, that initial draft will be sent out to all the stakeholders. Could be a CA member, SEBI, RBI, blah, blah, blah. Every member, it will be sent out for the comments. If you are receiving any comments and if it is valid, that comments will be incorporated, meaning it will be considered and the standards will be revised. Okay. If there is no comment, means the initial draft only will become your final draft. This final draft will be published by ICAI as accounting standards for non-corporate entities. For corporate entities, the publishing authority will be Ministry of Corporate Affairs, that is your MC. This is your broad standard setting rules or how it works. Can I move on to the next one? Don't worry how questions will come and all. I'll tell you, we have some questions also. Generally, they ask from this topic and all. Maybe you may get a question for around 2 marks. Not a common occurrence, but could come. Okay, but my responsibility is to make sure that we have everything. Whether it comes for 2 marks or whether it comes for 10 marks, we give the same amount of weightage and same amount of dedication. Alright, because you can never trust. This time it could be for 2 marks, but in your attempt it may come for 5 marks also, you never know. Because there is a never in C. There's always a first time. So don't judge a topic just by its marks. Sometimes it can backfire. All right, that is one. No. Sir, we covered what till now? Accounting standards. But there is also something known as Ind AS. So I'll just quickly cover that and then move on to the AS portion. We have only AS portion in our syllabus. Ind AS will be learning only in CA final. What is this Ind AS? Sir, who issues AS and all? Matlab, either Ministry of Corporate Affairs or ICA. Both are Indian body only, no? Indian means, can I call it as local? So accounting standards are local standards, applicable for a particular country only. AS is accounting standards are only applicable for Indian entities because it is issued by the Indian bodies. Ind AS is it's international standards. What happened was, these days you are sitting in Bangalore and working for a company in US and receiving the money in probably pounds or dollars also. Because now place, things and all have become absolutely irrelevant, correct? No, you can stay anywhere, work for any company, earn money in any currency also. Because world has become one market now. You can purchase from wherever, you can work wherever, correct? No. So what happened was, if let's say you want to invest in US company, you have some extra money. You thought for the purpose of diversification, you have invested enough in the Indian companies, real estate, stock market, everywhere you put in your money. But for the purpose of diversification of your portfolio, you want to invest, let's say, in one European country. Or let's maybe you want to invest in US company. Will you understand US ka rules? You know Indian accounting rules. You're comfortable with that, correct? No? Indian accounting standards, all this you're comfortable. Do you think US will follow the same thing? Or they have their own local standards? They have their own US GAAP, they call it. Generally accepted accounting principles. Here we call it as accounting standards. There they call it as GAAP. That is the applicable for US company. Do you think US ka GAAP and India ka accounting standards will tie up pie to pie? Or there will be differences? Differences. You as an investor are comfortable with Indian line of things, Indian structure. Will you be comfortable with US ka rules or European rules? Without studying financial statements, would you be comfortable investing money there? No. Correct. No. You have to study, then only you will be able to invest. That means there was a need to form not an local standard, there was a need to form an international standard. Okay, which we call it as IFRS, if you remember. AS is nothing but local standards. IFRS is your international financial reporting standards. These are your international standards, which is applicable for all the countries now. So now, because you can work anywhere, you can raise money from everywhere, there was also a need for one standard which is applicable throughout the world. Hence, they formed something known as what? IFRS. So India also has to apply this, correct? No. So India, what we have done is, we don't believe in copy paste. We don't like that. We took it to our heart. Why we should copy? So what we did was, we took IFRS and we added our own masalas. Wherever necessary, we added our own masalas. Some tadka we put and we got something known as what? Indians. Hence we say India has not adopted IFRS. India has converged to IFRS. We say converged means we have taken it and made some changes wherever necessary and formed something known as what, sir? Indians. These are your IFRS only, but Indian version of IFRS. Got it, everyone? So AS is nothing but your local standards. Ind AS is nothing but your international standards. Got it? Now the next question will be, so who should follow? Which company should follow? AS. And which Indian company should follow? Ind AS. Correct. So for that, they have brought in again, they brought in certain parameters. Which company should go for AS and which company should go for Ind AS. Ideally, they should not be asking this, but it is there in your study material. Hence, quickly I would like to run through. One, listen to this. It's all given over there. From 1st April 2015 onwards, no, Ind AS, if any company wanted to voluntarily apply, they could have done so. It's all given here. On 1st April 2015 onwards, any company, if they want to apply Ind AS voluntarily, they could do so. From 1st April 2016 onwards, they brought Ind AS on a mandatory basis. To which companies? One, if you are a listed company. Listed company means your shares or debentures are listed on the stock exchange. So if you are a listed company and if your net worth is 500 crores or more, if you are a listed company and if your net worth is 500 crores or more, you have to compulsorily apply what standard? AS or Ind AS? Ind AS. This is one parameter. Second parameter, excuse me, unlisted company having a net worth of 500 crores or more. Not a listed company, but even their net worth is 500 crores or more. Even such company have to compulsorily apply Ind AS. If you are if you are a subsidiary or associate, don't worry about this. This will cover in group 2. If you are a subsidiary or parent of any of these companies, then also Ind AS will be applicable. Just know this for now. Group 2, I'll tell you what this is all about. Okay. Or maybe one example I'll tell of. A Limited, B Limited. A Limited owns 90% equity shares in B Limited. A Limited owns 90% equity shares of B Limited. Sir, what do we call A Limited as? We already discussed this. Yes, in some chapter it came, I think. Some example I had given you this. Okay. A Limited we call it as holding company. Another company we call it as subsidiary. Is it okay? Right? Everyone comfortable? If you own more than 50, if one company owns more than 50% shares in another company, the person or the company holding the shares we call it as holding company. Other company we call it as subsidiary. What they're trying to say is, if holding company is following Ind AS, then subsidiary company also should follow Ind AS, no option. If subsidiary company is following Ind AS, holding company also has to go for Ind AS, no option. Whether the turnover limit or the net worth limit is satisfied or not satisfied does not matter. For holding company it is applicable means for subsidiary also it will be applicable. Or other way around also works. If subsidiary is following Ind AS, then holding also has to follow Ind AS. Vice versa. Comfortable? That's what they mean by the third criteria here. Okay, sir. Remember these limits. I have not seen questions so far, but you never know. Okay, this is the limits you are expected to remember. Quite simple only. Net worth is greater than or equal to 500 crores. For such company, Ind AS is mandatory, applicable from which date? 1st April 2016. Then from 1st April 2017 onwards, again they brought in a new limit. The next limit is, first, how much was the net worth, sir? 500 crores. They made it half. Half means 250 crores. So if you are a listed company, okay, or in fact, they brought in the rule like this. If you are a listed company, compulsorily Ind AS. If you are a listed company, compulsorily Ind AS. From which date? 1st April 2017. Or if you are an unlisted company, but your net worth is more than 250 crores, then also compulsorily Ind AS. Then parent and subsidiary, just now I explained, no, this particular rule. Then it will also be applicable. What is the rule again there? 1st April 2017 onwards, what is the rule? All listed companies, whether already listed or in the process of listing, meaning you have applied for listing, documentation is still pending. Even such companies have to follow Ind AS. Alright? Or you are not a listed company, meaning you are an unlisted company, but your net worth is greater than or equal to 250 crores. Then also compulsorily you have to follow Ind AS. So my net worth is less than 250 crore. Then you go for accounting standard. Like that. So that's the clarity given as to which company should apply what. Okay, now clear everyone? Just know the limits. It could be us. I don't know whether it will come or not. People okay? So this is about the companies. For banks and NBFC and insurance company, they have given the limits, but it's still under consideration because there is a lot of differentiation between RBI rules and certain clauses of Ind AS. So there is some kind of gadbad going on. They're not able to clash. So banks, I don't think so. Still, you're made applicable. So don't worry about banks. Banks, insurance company, you can leave it out. Only remember the limits for what, sir? Companies. What are the limits again? Tell me. Let's see. Let's remember it here only. 1st April 2015 onwards, it was mandatory. Mandatory or voluntary? Voluntary. Meaning any company, even though if they are not satisfying the limits, but still they wanted to apply Ind AS, they can go for it because it was given on a voluntary basis. Then from 1st April 2016 onwards, they introduced this in phases. India, no, you can't implement everything in one go. People will suddenly, they will do a lot of atyachars and other things. They'll come to road only. Because we are we are ethnically very diverse we are. So you can't implement anything in India in one go. You have to always implement it in stages because we need that time to emotionally kind of prepare ourselves. So even India also, there was a lot of problems. Still there is problems. I'm not saying no. So first time it came into picture on 1st April 2016 on a mandatory basis. Mandatory. What is the first rule?
Listed company.
If you are a listed company or in the process of listing and your net worth is more than or 500 crores or more, then compulsory. You are an unlisted company, but your net worth is also 500 crores or more, then Ind AS compulsory. If your holding company has Ind AS, then subsidiary also Ind AS. If subsidiary has Ind AS, then vice versa, or meaning holding company also Ind AS. So like that. That is your third parameter. Then second phase came in 1st April 2017. Then in this phase they told all listed companies have to follow Ind AS. Listed or in the process of listing, compulsorily Ind AS for you. Okay, because you're playing a lot around with public money. Okay, so that's the reason they made Ind AS only compulsory. Then unlisted company, but net worth is 250 crores or more, then also Ind AS. So if you are not following this within this limits, then Ind AS is not applicable for you. You can follow accounting standards. That's the differentiating factor. Comfortable. So for years there is no limit. We will discuss that. We have not come to that. Yes, also they have given some relaxation which we will target. All right, next one. There is a small thing known as carve in, carve outs. And I'll tell you in one liner. Just not that important again. More important for your CA final. Just quickly cover through what is this. Carve out. Now I told India has copy pasted IFRS or we have made some changes. We have brought in some masalas and made some changes. Correct? That is the reason we are not calling it as IFRS. In India we call it as Ind AS. Okay everyone? Now that means there is some difference between IFRS and Ind AS. Correct? No? Now if IFRS, listen to this, no need to check anywhere. If IFRS says go left and Ind AS says go right, because culture is different. IFRS is saying go left. Ind AS is saying go right. Both are same things or two different things? Two different things. No? If both of them are saying different things, then we call that as a carve out. The difference between Ind AS and IFRS, if they are different, that area of difference we call it as what? Carve out. Simple. That is saying do one thing. This is saying do another different thing. That we refer to as what? Carve outs. We hardly have only 4 to 5 carve outs as of now the way things stands. Otherwise, majority of the things fall in line with IFRS. Ind AS and IFRS are mostly same. Got the meaning, no? Then carve in. Other than carve out, we also have something known as carve in. Carve in means what? Let's say IFRS, no? For a particular treatment, they have given 3 methods. For a particular component, they have suggested how many methods? 3 methods. Just an assumption. Ind AS is giving you only 2 options. IFRS is giving you 3, but Ind AS is giving you only 2. So is Ind AS deviating, or these 2 also comes here only? These 2 are also 2 is also comes here only. No? IFRS is just giving you some extra option. That we call it as carve in. If there is restriction in options, we call it as carve in. If there are differences, then we call it as carve out. That's the meaning. Okay, just know the meaning, not that important. Understood everyone? Differences are known as what? Carve out. Differences between what and what? IFRS and Ind AS. Right? But if you are limiting the option, if there is limiting the option, that limiting the option we call it as what? Carve in. Limiting means here you have 3 options, but in Ind AS you have only 2 options. Yes? That means are you deviating from IFRS? Now, if you follow 2 options, then still IFRS also recommends these 2 options also. No? Along with this 2 option, it gives you one extra option. So that differences we call it as what? Carve in. Okay, sir. Anyways, it could be vice versa also. Okay, I'm just for the sake of example, I took 2, 3. You can also make it as 2, 3. Then also it is a carve in. Actually, this one method is like totally out. But if you're following that one other method, then it becomes a carve. Okay, let's not go too much into all that stuff. This is okay with you, everyone? That we'll take it at CA final level. But as of now, only few carve outs are there. Not that much of a headache. Okay, sir. Now the next question probably running in your mind is, sir, when will class end? No, other than that, just like we discussed the method on, just like there was for Ind AS, there were certain limits. For accounting standards also, there should be some limits. No? Correct, right? Which company should follow accounting standards? Which company should not follow accounting standards? Or is there any relaxations or any exemptions and blah, 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 blah? You have studied Income Tax Act. You know exemptions and all. No? If Income Tax Act can give so much exemptions, 10 exemption, 54 exemptions, so many exemptions. ATC deductions, yeah, so much things, correct? Then why can't accounting standards also give some, correct, no, Papa? You think practically, can you make accounting standard compulsory for every company? First, we'll study this, then I'll go for the relaxation part. Sir, what they brought in as a simple thumb rule is, if you are doing any commercial activity, meaning business activity, whether you earn from profit from it or whether you don't earn profit, doesn't matter, accounting standard is applicable. What did I say, sir? If your activity is commercial, now right now we are teaching, correct? Obviously, are we doing it free of cost or are we charging some money from you? Money from you. That means, is there any business element here or commercial activity involved? Yes, because even we have to survive, no? Correct? We can't do it at free of cost also, then nobody will come, no teachers will come, and you'll only have to play what? You have to play some movie on the TV and get lost, correct? No? So obviously, so that means what we are doing here also is a commercial activity. If you are doing even an iota or a little bit of commercial activity, then what? Accounting standards are applicable. Whether your intention is to earn profit or not, or whether you earn profit or not, doesn't matter. If you're doing commercial activity, compulsorily AS is applicable. Are we okay? If you're doing pure charity, at least many people say that, but they don't do it. Okay, if you are in that category, then accounting standards are not applicable. Meaning, on one hand, you take the money, entire money, you donate it off to somebody else. That kind of charity you're doing. 100 rupees if you take means entire 100 rupees you will give off. Such dana shura karna you are, or your company is. So in that case, accounting standards are not applicable. Got the first criteria? When accounting standards is applicable, when it is not applicable? AS is applicable for what, sir? Commercial or business activities. If you are not doing any commercial activities, AS is not applicable. And when I say AS, I mean what, sir? Accounting standards. Ind AS over. Leave that Ind AS now. Okay, Ind AS is there, only there. That much only. Lot more about Ind AS we'll learn next only in where? CA final. Going forward, now we're going to learn only AS, when it is applicable, what are the exemptions and all that, blah 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 we'll do. Partial charity and all doesn't work. If there is, that's what I said, no, if there is even a little bit of commercial activity, then standard accounting standards are applicable. Like that. Okay. Are there companies like that? Very much yes. Legally they are. They may use this legal route and they may be drawing money. That's a different issue. But legally, yes, there are. Charitable institutions and all. If you can prove it, then yes. Okay. Alright. So CA won't work in non-profit organizations. Huh? He will work. Why he will not work? But he will expect the payment. That's all. Okay. Okay. Anyways, say even to run a charity, you need employees. No? Paying salary to employees is not this thing. But that's acceptable. Okay, let's not go into too much of that. Leave. Now you got to know that if there is commercial activity, accounting standards are applicable. Sir, you in a break, no? Where do you go?
The break.
Chai shop. Huh? Actually, yeah. Okay. Luckily, you use politically correct languages. Okay, that's nice. Okay, let's say during the break you went to chai shop and you had a cup of tea. Today you learned accounting standards, no? You wanted to show off someone. You went to that chai guy and said, are you following accounting standards? Straight away asked. He said 10 rupees for the tea. He's like, hey, leave that much. You're following accounting standards. He's like, what is that? Then you explained all this. It covers the recognition of measurement, of presentation, of disclosure and all. He was patiently looking at it because he has to still collect 10 rupees from you. Okay. All right. Then you said, I will implement accounting standard for you. He said, okay, fine, do it. You said 10,000 rupees. You are ordering tea from him for how much rupees? 10 rupees. How much did you ask for AS implementation from him? 10,000 rupees. Okay. What do you think he will say? They take my shop only and go. Correct. No. Do you think for small vendors and all, you can jadify all these concepts? Do you think it will be practically viable for them to apply? No. Right? So yes, standards are good. They help you to standardize a lot of things, but also it cannot be made applicable on a blanket basis to every company. Because some organizations are big, they can afford it. Some people are they're hardly able to take their day-to-day money. That only they're struggling. For them, if you say accounting standards and all, they will stop doing business on. Correct? All these vegetable guys and all, Papa, if you go and tell them, they will literally run that cart against you. They will run that cart on you. Correct? No. Yeah. Like that. So hence they have brought in and they said, if there is non-corporate entities. Non-corporate entity means
It's not a company.
Not a company, meaning sole proprietor, partnership, and all this stuff. Okay. What they said is, okay, let's put them into 4 categories: level 1 entity, level 2 entity, level 3 entity, and level 4 entity. For level 1 entity, they are not giving much exemptions from accounting standards. Whatever standard is there, they have to compulsorily follow. For level 2, level 3, level 4, they have given certain exemption. Like some standards they need not apply. Like that, they have given some exemptions. Did you understand? This is how they have categorized. For what, sir? Non-corporate entities. How many categories I told? 4. Level 1, level 2, level 3, level 4. It's all given over here. These are the limits. You need to compulsorily know the limits because the next 2 questions are based on this particular limits. Nobody will give you the limits. You need to remember the limits. I'll tell you how. Don't worry about the too much theory brought in there. That's from study material. I'll just give you one line by what you need to remember. Okay. First, level 1 entity means what? If you are a listed company, meaning whether your shares or your debentures are already listed or it is in the process of listing, doesn't matter whether in India or outside India. Indian companies can also get their shares listed outside India. Some of the many shares are already there. Infosys, Wipro, I think all are listed in NASDAQ in US also. Okay. All right. So if you are a listed company, already listed or in the process of listing, whether in India or outside India, then compulsorily you are or you will be known as what? Level 1 entities. Is this okay? Everybody good enough, sir? All right. This is the first criteria. Second, if you are doing any banking business or a financial institution business, or if you are doing insurance business, you are compulsorily level 1 entity. If you are a bank or if you are doing in a financial institutions ka major game is what? Accept deposits and give away the loans. Like you have Bajaj Finance, Bajaj Finserv and all. They accept deposits and they give away your loan. Bajaj Finance, their network is crazy only. Whether you want to buy one phone or one mixer, one fridge, everywhere they'll come off. You want EMI? We'll give you no cost EMI. Yeah, like that. Correct? So, but for that, Rokka, money, where did they get? From you people only. Because they give you, bank give you fixed deposit rate of 6%. Bajaj Finance gives you currently 8%. So many people are saying it's a reputed company. The day it started, the share price was 10 rupees. Now it is almost trading at 5,800 or close to 6,300. Okay, so they have proved their net worth and they're very quite manageable in terms of their loan disbursements. So many people don't mind making the fixed deposit in Bajaj Finance. Safe also. You guys almost has AAA rating from CRISIL, ICRA and all. So safe as well as higher interest rate. So people give the deposit to such companies. They in turn lend it out to again back to us. That concept. Take the money from the people, give it back to the people and make money. Got it? So if you are that, we call it as financial institution. So if you are a bank or if you are other financial institutions or if you are doing insurance business, then compulsorily you are what, sir? Level 1 entity. You didn't understand Kannada? No problem. I told no. For the people, by the people. That way. Take from the people, give it back to the people. That's all. That was all the dialogue in Kannada. Nothing else. Yeah. Corporate, we'll see it later. There's a separate limits. Next we will come. You are 2 steps ahead of me. Slow. I am slow. I'll come. First let's cover this. Then we'll go there. Okay. So you got the 2 limits now. Listed company or second one if you are a bank, financial institutions or insurance business. Then the third limit is this you need to remember, sir. If your turnover exceeds 250 crores. If your turnover exceeds 250 crore, then compulsorily you are what? Level 1 entity. Just underline that you need to remember. Okay, limits you need to remember. Okay, in the immediately preceding accounting year. In the previous year, if your turnover exceeds 250 crore, then current year you will be called as what? Level 1 entity. Because this year, if you want to assess your level 1 entity, you are at year beginning. Year beginning only you'll be able to, your turnover will cross up. So what will be used as base? Last year ka turnover. They check last year ka turnover. If it is more than 250 crore, then for the current year you will be known as what? Level 1 entity. So here this limit is what? Turnover should be more than 250 crore. Or your borrowing should be more than 50 crore. This is the limits. 2 limits you need to remember. Either should your turnover should be greater than 250 crore or your borrowing should be more than 50 crore rupees. In these cases, you will be known as what, sir? Level 1 entities. Comfortable? Yes, two limits only, 250 and 50. Turnover exceeds 250 crore, borrowing exceeds 50 crore. So we are expected to memorize this, or yes. That's a little bit of tragedy with CA examination, that they will test you what? Not only the concepts, but also your memory. How much you are able to retain and reload. So that's the reason this also you are expected to remember. They will not give you the limits. Okay. So much of things you remember, no, 2 limits extra you can't remember. You can, right? Even if you say no, you still have to remember only. Yeah? So take it in the right spirit and remember. All right. Fair enough. Yes. Other income here means other than your turnover. You will have other than turnover some other incomes. No, that is excluded for this calculation. Don't worry, they will not go too much into all that stuff. Basically, keep it as turnover. That's good enough. Okay, first limit you got it. Those are your level 1 entity. Second will be level 2 entities. Here, first limit ka turnover was what, sir? 250 crore. Here, the turnover limit is 50 to 250 crores. Turnover is what? Turnover exceeds 50 crore, but it does not exceed 250 crores. Because if it exceeds 250 crore, then can you be level 2 or you will become level 1? You will become level 1. Okay. So if your turnover exceeds 50 crore, but it does not exceed 250 crore, then you will fall under category they've all given over here. Okay. Then you will become what, sir? Level 2 entity. What was the borrowing limit there? 50 crore. Here the borrowing limit is exceeding 10 crore, but does not exceed 50 crore. Like 10 to 50 is the limitations over here, given here again. That's the limitations for, or the parameters for level 2 entities. Excuse. Can I go for level? No. Doubt. What doubt? What does company following AS means? Huh?
If company is following AS and they change the AS, they want to.
Next level only. Too many things are there. I have to speak for more than 2-3 hours for that. Standard by standard you have to go. There are some rules. If you're converting, what to do. Okay. Lot of things next time. Not the right time. Because there are a lot of works to be done there. Because Ind AS has retrospective applications. Meaning from the beginning you have to follow. So they have given each standard talks about some relaxation things. You have to follow it. For that I have to teach you whole Ind AS. Not probably 20 hours. I have to teach you 300 hours. Then your question to your answer will be given. For now, I think I don't have that much time, nor do you have so much patience. So let's move on. It's fine. Okay. Good question only, but you'll have to wait for your CA final coaching accounts to be completed. Then it will be sorted. Not now. Final we have. That's the reason I'm saying after he completes final coaching of accounts, then he will have answer to his question. Till then, sorry much, I don't have that capability to answer now. No, neither you have the capability to absorb. That is also reality. Okay, come back. Level 3 entities. Next is level 3 entities. If your turnover, where is it? By here only I understand. Exceeds 10 crore but does not exceed 50 crore. Basically borrowing of the previous limit. What is the borrowing of the previous limit? Exceeds 10 crore but does not exceed 50 crore. Copy this only here. That is level 3 ka turnover limit. Okay now. Then borrowing exceeds 2 crore but does not exceed 10 crore. This is your level 3 ka. It's given over here. Underline that only. Exceeds 2 crore but does not exceed 10 crore. Or baju mein write off like this. So that on the examination day, you just don't have to read the whole English vocabulary. That should be good enough for you. Okay now. So those are your limits for level 1, level 2 and level 3. If you are neither level 1 nor level 2 nor level 3, then you become a bichara and you fall under which category? If you are neither level 1, level 2, level 3, then you automatically become level 4 entities. So why do we need this, sir? I'll tell you. Know the limits? Okay, just I'll give you a minute. Try to absorb it. Keep the number in mind. Then I shall tell you why those are required.
During the year, companies
Previous year. We use previous year as a base to check whether this year we fall into level 1, level 2, level 3 or level 4. Like that. All right. Now, listen up. So you got the limits, no? Now, why the limits is applicable is just write down Bajume. I don't know whether it is given. Okay, maybe you write off here. What they have done is for level 2, level 3, level 4 entities, no, they have given some exemption. Meaning they have told some standards you need not apply. You're very small. Those standards are really out of your capacity. Leave it. We don't want you to follow that. So some exemption has been given for whom, sir? 2, 3 and 4. Write down Bajume. There are many, but I'll just try to remember 4 or 5. That should be okay. AS3, AS17, AS21, AS23, AS27 are what, sir? Not applicable. For which entities? Level 2, 3 and 4 entities. For level 2, 3, 4, these standards are what? Not applicable, meaning these companies need not follow this. AS3 is your cash flow statement. AS17 is your segment reporting. AS21 is your consolidated financial statements. AS23 is investment in associate. AS27 is investment in joint venture. You don't have to remember the names, just remember the standard number. It is okay. Whenever they say case study, just write this. All right. So these are what, sir? Applicable or not applicable? For level 1 entity, you are the highest guy. You are in the top of the food chain. That means everything you have to follow. So for level 2, level 3 and all, they have given some exemption like this. Okay, now? I don't think so. Here they have given. All right, no problem. Leave. So you'll be able to remember this much. Okay. Maybe write down one more thing. AS18, no? Accounting Standard 18, which talks about related party disclosure. For level 1 and 2, applicable. For level 3 and 4, not applicable. If you can remember this also, otherwise just remember the first box wala data, that should be okay. All right. 1 and 2 applicable, 3 and 4 not applicable. They have given various exemptions. Each standard has many exemptions. Don't worry about so much. This should be good enough. Okay, now everybody remember, I'll give you a minute to remember this limit. Anyone still copying? Copy. Yes, copied. All right, I expect you to remember this limit. Go through this once again. Last question. I wait. Question it seems. Okay. All right. Remember the limit. Question number 1 or this example is all yours. Let's see how well you have understood the limits. Omega and Co. It is a partnership firm. Partnership firm means a corporate entity or a non-corporate entity. Non-corporate entities, there are 4 categories. Level 1, level 2, level 3, level 4. All you have to do is tell me which category does this entity fall under. Okay. Omega is a partnership firm. It has a turnover of 1.25 crores. What was level 3 ka minimum turnover?
2 crore.
Borrowing turnover 10 to 50 exceeds 10 crore but does not exceed 50 crore. Level 3 kada. This one turnover. Yes, no? Minimum turnover it should have is exceeding 10 crore but not exceeding 50 crore. But this company has a turnover of just 1.25 crores. And it has a borrowing of 0.95. Level 3 ka, what is the minimum borrowing limit? It borrowing exceeds 2 crore but does not exceed 10 crore. Is the borrowing exceeding 2 crore or well within that? Well within that. That means automatically you can conclude that this Omega is what entity? It's a level 4 entity. Comfortable everyone? Just remembering the limit, that's all. Okay. In the previous year, great. It wants to avail exemption available in respect of accounting standards to non-corporate entities for the year ended 31st March 20x1. It wants to take the exemption. Advise the management of Omega in respect of exemptions as per the directive issued by ICAI. What do you think? Management wants to take exemptions. Can they take?
Yes.
Yes. First you will say Omega comes under level 4 entity. Why does it come under level 4? You'll write level 1, level 2, level 3 ka definition. Huh? You use level 3 as a base and conclude that this is a level 4. Like what you'll say in the present case. Is it okay if I discuss? It's all given here only. Since the turnover of Omega Limited does not exceed 10 crore and borrowing of Omega Limited does not exceed 2 crore, it is what entity? It is a level 4 entity. Point number 1. Is it okay? Yes. And then you will say what? Level 4 entities can avail accounting standard exemptions. And then you can write some exemptions. What are the standards they can exempt it from? AS3. Many are there. I've just called out a few. AS3, 17, 21, 23, 27. Why this? Because corporate entities and non-corporate entities, these are similar. That's the reason I'm asking you to remember only this. 3, 17, 21, 23, 27. Just write that only. There are more. You don't have to worry about more. You just say like this. These are not applicable for this particular entity. Is the question and the solution comfortable with you? Yes, sir. Got it answer? Only this para you concentrate on. Other things and all, don't worry. It's fine. They've just given level 3 ka definition here. That's all. Or whatever they've given. It's fine. Okay, people. Any doubts online or all good online? All good, huh? Now, this is for non-corporate entities. What if you are a corporate entity? Even in company also, you can have small companies. No? Possible. There are some big companies as well as some companies with like ArivuPro, very, very chota company. Correct. Now, we can be small companies also and there could be some large corporate also. If it's a small company, ideally, even small companies should get some benefits. Correct. Now, basically, AS exemption you are giving to small companies so that it doesn't become too much burden for them and it doesn't become, because AS implementation and all is not easy, sir. People charge a bomb. India's implementation and all, if Big Four takes assignment, no, minimum billing is 50 lakh upwards. Minimum. It goes to 2-3 crores also. Implementation, that's all. Meaning, helping the company in applying the standard, setting the base. Minimum, aram se. So, do you think that is cheap or quite big amount? Correct, no? Correct? So, that's it. Okay, oh, nice. Then we will learn, sir. Then now you came to the matter. This you should have told first. We would have become full alert. Okay. So, it's not that easy also because CS. See, whatever you're learning here in books, no, cannot be applied pinpoint there. Accounting system are different. You have to implement means you have to implement in SAP, Oracle and all. Yes. So, you need to have the technical background also. So, it wants a lot of people as well. So, one person cannot just go there and say, I will do implementation and do it in company. Okay, so you need a pool of resources for it. And it's not that easy also because there is a lot of crunching activities. Okay, let's leave that. So, coming back, you understood that even in company, there could be big companies as well as small companies. Small companies also should be given some exemptions, no? Hence, what they have done is, company, no, they did not divide into level 1, level 2, level 3, level 4. MCA did only simple thing. They said SMC, meaning small and medium company, and non-SMC. Corporates have only two categories, SMC and non-SMC. If you are a non-SMC, boss, no relaxation from you. You apply everything. Every standard you have to apply. If you are an SMC, then AS3, 17, 21, 23, 27. Not applicable. There are others also. Remember this because that is matching with non-corporate entities. Understood everybody? Okay, so if you are SMC, you get some exemption. Now the next question is, when will you become an SMC? Okay, or when will you not become an SMC? Level 1 ka limits you tell me. There was conditions. Level 4 conditions were there. What are the level 1 entities ka condition? First, if you are a listed or in the process of listing, whether in India or outside India, you become level 1. Yes. Second one, if you are a bank, insurance company or a financial institute, then automatically you become level 1. If your turnover exceeds 250 crore or your borrowing exceeds 50 crore. Okay, these are the limits for level 1. Level 1 entity there. Level 1 entity there is nothing but non-SMC. if you are a level 1 entity ka limit, if that level 1 entity ka limits are getting satisfied, then company we call it as what? Non-SMC company, because level 1 is big companies, big entities. And big entities only we call it as what? Non-SMC. So if level 1 entity ka conditions, 4 conditions which you just now told, if it fails means you become what? If level 1 entity ka condition, if it fails, then automatically you become SMC. If you are an SMC, you get relaxations. That's all. It is a lot simple here, no? You don't have to remove 4 limits there. You have to only remove 2 limits. Turnover exceeding 250 crore. Borrowing exceeds 50 crore. If turnover exceeds and borrower exceeds means you are a non-SMC. Otherwise, you become an SMC. If you are an SMC, you do get the exemptions. Any problem? Yeah. ArivuPro SMC, yeah, chota, very, very small company. Yeah. What's the turnover? I'll tell you tomorrow. Are we okay with this now? Understood the limits? So that's what they've given here, everything. And again, I will not recap. It's okay, no? Okay. What done? 100 crores. Go on, your zeros, your number, go on adding. Who is preventing 100, 1,000 to 10,000, whatever number. All right. We invented zero. Correct. Bindas, you can go on attaching. All right. So yes, overall you got it now. So for non-corporate entities, there are 4 limits. But if you are a company, there are only 2 limits. Okay. Now this one is all yours. Question number 1 though. Question number 1. XYZ Limited, sir. XYZ Limited means non-corporate entities or a corporate entities? This is a corporate entities. Corporate entities have 4 categories or only 2? Only 2, SMC and non-SMC. Okay, let's see. It has a turnover of 50 crore. That means it is hinting towards what now? It is going towards SMC now. SMC means small company. That SMC, non-SMC may confuse you. Always write till full. SMC means small company. Is this a small company? Yes. Okay. Because the turnover is not crossing 250 crore. And it has a borrowings of just 1 crore. That means borrowing is exceeding 50 crore or very much less. Very much less. Anytime during the previous year. They've given the turnover and borrowing for the previous year. Great. Both the limitations have got failed. It wants to avail the exemption available in adoption of accounting standards applicable to companies for the year ended 31st March 20X1. Advise the management on the exemptions that are applicable as per companies rules of 2021. What is it, sir? Can they apply? Can they take the exemption? Yes. How will you answer? First, you will write non-SMC ka limits. 4 limits are there, no? What are those limits? Same thing. Correct? Listed O and then Banco, turnover more than 250, borrowing more than 50. And also, if you are a holding and subsidiary, that I told. Yes. If your holding company is applying AS, subsidiary company also has to go for AS. If a subsidiary is going for AS, holding also should go for AS. That is also there. It's given in the limit. We didn't discuss that. That's all. Okay. It's given here. People okay? So those limits you will write first. And then you will write what? In the present case, XYZ ka limited ka turnover does not exceed. Turnover does not exceed 250 crore and borrowing does not exceed 50 crore. Hence, this particular company is what? It is an it is an SMC. That is small and medium company. If it is SMC, is the relaxation applicable? Yes. So you will simply write. If you want, you can simply conclude that accounting standard exemptions are available to this company. That's all. Whatever I've discussed, is it making sense to you? These are the limits and this is your conclusion. No need to write down, right? Should have to give or this is okay? Okay, no, got it, right? Just write the limits and conclusion, 2 points. Can we do that? So over, sir? No. This is over. And one more small concept is there and one more question and chapter is over. Chapter. Very small chapter. They've given separate limits. It's not necessary if both should be satisfied. Even if one is satisfied, you become. Either it is. It's not and. Either. It's a rules formed. Okay. ICA took a longer route. MCA said we'll make it shorter. Why do you want to define four limits and all? Let's keep only 2. It's just a matter of simplicity. ICA took a bigger route, more complex route. MCA has taken a smaller route. That's all. It's a rule. That's all. So after all, it's a limit, no. So they kept this as a limit to give exemption. That's all.
The cross should be because they will directly follow and
Huh? Yeah. This limits was there from the beginning. Okay. So yes. Then they'll have to go there also. That's a different issue. But he's saying, sir, if turnover crosses 250 crore, then they have to compulsorily apply in days. But here we are solving, our subject revolves only around AS. So you don't have to talk about in days unless they ask you a question related to in days. So as per your syllabus is concerned, answer only from the perspective of AS. Don't mention in days anywhere unless asked. That is exclusively next stage. So last exemption available, we have to write. All the 5 exemptions you write.
corporate entity.
Exemptions, AS 317, that one. If you want to write, or just simply write AS exemptions are applicable. That is fine. Or you can call out which standards are not applicable. That also you can call out. It's the same. AS 3, 17, 21, 23, 27. Everything will come under, sir. Here only it will come. LLP is governed by MCA. No? So you'll have to follow MCA ka limits there. Whichever body is governing, that governing body ka rules you need to follow. Okay. Can I come back now? All right. Now, there are 2 more points that we need to remember, and we have one small question. What is that is? What the?
Corporate entities and non-corporate entities. Example,
Corporate entity means ArivuPro.
like
Corporate entity means company. Company registered under Companies Act, we call it as corporate entities. Partnership firm, sole proprietor, we call it as non-corporate entities. That's all.
then bank and all they have loans in level 1.
Banks and all generally will be companies only. Nobody will do a banking business in the name of partnership firm. But they've defined the rules like that. If anyone decides, no, I want to run bank in the form of partnership firm, nobody first of all will invest also. RBI will not give license also because they have limits there. Okay, but just saying that there is a clash of rules. Okay, yes, banks and all will be company only. But those companies will be more regulated by RBI because the specific rules are there. All companies are governed by MCA. You have to file all the documents, financial statements, director's report, and all the forms, etc. You'll have to file with them. Okay, now the concept is what I'm talking about is, sir, last year you were level 2 entities. Last year you were level 2 entities. Current year, no. Amazing business you did. Super duper business you did, and you became what entity? Level 1 entity. From level 2 you went to level 1. So it is an upgradation, correct? Okay. Now, if you are level 1 entity, should you have to follow all AS? You have to apply all AS. Agreed, sir? For level 1 entity, all the accounting standards are applicable. No exemptions are there. But for level 2 entities, was there some exemptions? Yes, for level 2 entities, there was some exemptions. Now the problem is, can entity take the exemption in the current year? No, because current year they have become what? Level 1 entity. When you become level 1, you have to follow. Correct, sir? But the problem is, if you remember, when you prepare financial statement, do you just give current year ka data or you also give previous year data? Financial statements like balance sheet, P&L and all, when you prepare, you not only give current year data, you also give previous year data for comparison purpose. Now, one problem is, current year you have to comply with all accounting standards. You have to follow. Whether previous year statement also you should rework. Because previous year, should you have to apply accounting standard 3 cash flow statement? If you are a level 2 entity, is AS3 applicable for you? No. That means previous year was cash flow statement prepared or not prepared? Not prepared. Current year should you prepare? Yes. So that means now for the previous year also should the company apply all the accounting standard retrospectively? No. That they have given exception. Did you understand? Okay. So if you go from level 2 to level 1, current year you have to apply all the level 1 ka provision. But when you give previous year data for comparison purpose, that you need not rework it again, because that will be too much, no? Because they can't rework the whole previous year data just because for the sake of comparison. What they have told is just give a disclosure that previous year you were a level 2 entities and you did not comply with accounting standard 31718 or 212327. Just give a disclosure, that is good enough. You need not again prepare previous year financial statements with necessary accounting standards. That's what they're saying. Did you understand this? Once more, got it? Got it? Tell me in your own words what you understood. Let's see. This is a case of what? Upgradation or downgradation? You're going upgradation. That means happy scenario. Your turnover or your business is going on improving. So that means in my example, what we took? Level 2 to level 1. Should it be that only, or it could be level 4 to level 3 also? It could be level 4 to level 3 or level 3 to level 2 or level 2 to level 1. Level 1 के ऊपर नहीं जा सकते हो. It will be that. Okay. So we took the example of level 2 to level 1. For level 2, are you given some AS exemption? Yes. Meaning, can you ignore some standards? Yes. But when you come to level 1, can you ignore it, or you have to follow? You have to follow all. So current year you have to follow all. There is no doubt that. But when you prepare current year financial statement, you not only give current year data, but you also give previous year data for comparison purpose. Current year you have followed with all standards. Previous year also, again you have to prepare revised financial statement to complying all standards, because previous year you took some exemptions. Why? Because you were level 2. Okay. So would that be fair on that company now? Asking them to prepare not only current year data but also previous year data again. That is too cumbersome. So what the standard is saying? Previous year data, you need not work it. Whatever is the previous year financial statement, take that only and dump it. No need to rework. Current year you have to comply with all the standards. That is what they mean in this particular provision. Okay. This is a case of upgradation. Good. Online also okay. Fadafat confirm. I know that time of the day, but yes, still important. Yes. What do you think the next case will be? Next will be downgrading. Instead of upgrading, now we are going downgrade. That means we are going from level 1 to level 2. So let's say we are going from level 1 to level 2. Not ideally the case that you want a business to go through, but unfortunately, let's say if this happens, this is, we call it as downgradation. Now, what is this cases? Level 1 entity, they have to comply with all standards. But level 2 entities have some accounting standard exemptions or relaxations, can I call? Okay, fine. Now ideally you think, since it has become level 2 entity, can they utilize the exemption? Yes. If they are level 2 entity, can they utilize the exemption? Yes. But they took a little extra, they thought a little extra and they told, current year don't take level 2 exemption. Because what is happening here, a big company is going and becoming small company. Yes. Don't investors want to know the reason for it? See, if you are a happy news, if there is happy news can wait. It is fine. Because people are anyway going to be happy. If it's a sad news, then you have to give proper information about it. Yes, no? Here come, it's a good news or a bad news? Bad news. Yes. That means you should tell the reason why, what happened and all that. So using that as a cushion, what they have told is, if there is a downgradation, immediately don't take exemption. Okay. You have to be, this becomes what now? Or maybe I'll take this as like this. I will go from here to here. I think that will be better to explain. Let's say here you were a non-SMC. It's same. It's applicable for SMC corporate as well as same provision is applicable for SMC, non-SMC and level 1, level 2 all are same there. You were non-SMC and this year you became what? SMC. Meaning you are a big company. From big company you became small company. Alright, what they are saying is current year is for SMC. Is there any AS exemption? Yes, but don't take it immediately. You should stay SMC for a consecutive period of 2 years. Then you take exemption, because this is a bad news. Investors want to know the information, what happened to the business, so that business drastically has fallen from a big company, they have become a small company. So that it's a news which everyone wants to track, no? You want to know more information about this companies, correct or not, sir? If you have invested money in such company, will you be happy or quite sad? Sad. And you would need more information for these companies especially. That's the reason they said don't take the exemption immediately. Wait for how many years? 2 years. And then you take exemption. That's all. This is just a precautionary mode. Because if you can't take exemption means you have to comply with all the accounting standards. So you have to give all the information. If you give all the information, stakeholders will clearly get to know why there is a downgradation or why the company has become small. With that intention or with that kind of to protect the interest of the investors, they have taken this particular rule. So what is the funda of this now? If there is a downgradation, immediately can you take exemption? No, you have to wait for a consecutive period of 2 years. And then you take. For 2 years also still if you are a SMC only. Then go ahead and take. 2 years you wait. From 3rd year onwards, you can take exemption applicable for what? SMC. Don't take it including current year. Current year plus 1 year. Current year if you become SMC, don't take it now only. Current year plus 1 year. That becomes your 2 years. And then you start taking exemptions available for SMC. This is just as a precautionary mode, nothing else. Okay, that's the rule they brought in. Okay, G. Like that. Correct. So got it, Let's see how you have got it. Let's take up a question. Question number 2. 2. Now they started saying 2 and all. Enough, sir. What? A company was, I know it has come generally for 2 marks, but 2 marks are also important and quite easy. No? Just have to remember few limits and few provisions and aram se 2 marks in your pocket. Okay. All right. In simple words, if going to this question, if there is upgradation, what, sir? If there is upgradation, good news or bad news? Good news. But previous year data, again, you need to rework or not required? Previous year data, you need not rework because that becomes too much cumbersome. Only current year data, you apply all the accounting standards. Previous year data, you need not rework it. If there is downgradation means immediately can you take exemption? No, wait for a consecutive period of 2 years and then go ahead and take the exemption. That's all is a funda of this particular point. Now, is it okay summary wise? Okay, read this question and tell me. And this particular limit, upgradation, downgradation is applicable both for corporate entities as well as non-corporate entities. Same thing, okay? Downgradation from 2 to 3 also same rule. Downgradation from 3 to 4 also same rule. Any downgradation, same rule. A company was classified as non-SMC in 20X1, X2. That means this is a small company or a big company. This looks like a big company. Which year it was a big company? 20X1, X2. But somebody put to Kannu. In X2, X3, it has been classified as SMC. The previous year it was a big company, meaning a non-SMC, but in the current year it has become SMC. So upgradation or downgradation. Downgradation. It is going down. Correct? No, it's become a small company. So it's a downgradation. The management wants to avail all the exemptions or relaxation available for SMC in which year itself? X2, X3 itself. Which year they became SMC? X2, X3. That year only can you take all the exemption or you need to wait? Wait. But what does management want to do? They want to take now only because they want to do less work. Okay, they're saying why we'll take exemption. However, accountant of the company, he attended our this session. So he is saying, no, I don't agree with you. You need to comment. Management is saying, take exemption. Accountant is saying, no, it is wrong. What do you think? What do you think is? Unfortunately, or actually fortunately here, accountant is actually good. He's a good accountant. He's giving you the right calls. So can you take exemption immediately or wait for 2 consecutive years? You have to wait for 2 consecutive years. Then only you will be able to take the exemption available for SMC. So accountant opinion or his contention is absolutely right-ho, correct-ho. Accountant is me? No. Done, sir. Third question, advantages of or benefits of accounting standard. Have we not already discussed that? This was, I think, one of the examination questions I've just brought in over here. 3 points we have written. Write that. And with this topic we have concluded. Let's have a quick recap. 2 minutes only. Hang on. Okay, topic name is overview of accounting standards. Standards are necessary because you need some additional guidelines. Any standard covers only 4 areas: recognition, measurement, presentation, disclosure. That's all. Okay. Then benefits of accounting standard is: one, it will make the accounting process standardized. It will make financial statements comparable. And due to additional information, all the investors will be able to get more data, rather they'll be able to understand financial statements better. So advantages: in India, the lead of formation of AS is taken by ICAI. They have a board known as Accounting Standards Board. And ASB, broadly, they work as to which area we need to form accounting standards. After that, they form a study group. And a study group will collect the data and will they will formulate the standard. That draft standard will be circulated to all the stakeholders for any comments. If there is no comments received, then that only will become final. If there is some comments received, then they may fine tune or change the draft standard and make it into final. This final standard will be published by ICAI for non-corporate entities. This will be published by MCA for corporate entities. Okay. All right. Then we talked about Ind AS. Ind AS is nothing but AS is local accounting standards. Ind AS is international standards. So India, we have not copy pasted, rather we have converged it to IFRS, meaning we have taken it and made some changes. That's the reason we call it as Ind AS. Okay. Ind AS was applicable in 3 phases. First, on 1st April 2015 on a voluntary basis. Then 1st April 2016 on a mandatory basis. First mandatory rule was listed company with a net worth of 500 crores or more. Then unlisted company with a net worth of 500 crores or more. Then that holding subsidiary wala relationship. Then on 1st April 2017 also it was applicable on a mandatory basis, with for all the listed companies have to compulsorily follow Ind AS. Unlisted company with a net worth of 250 crores or more, and this holding subsidiary wala data. Okay. All right. Then we learned carve in and carve outs. Carve out means IFRS is saying something else and Ind AS is saying something else. Both are saying 2 different things. That difference of opinion we call it as carve out. But if there is any restriction in the option, then we call it as carve in. Then we looked at accounting standards. Every entity has to follow AS. Yes, every corporates which are doing commercial activities. Every entity, corporate or otherwise, if they are doing any commercial activities, then they have to follow accounting standards. And if you are a non-corporate entity, you have been categorized into 4 categories. Level 1, 2, 3, 4. Maybe to give some exemption. Level 1 entity is like a big entities. So they have some limits. One is if you are if your shares or debts are listed in India or outside India, or if whether you are in the process of listing. Then if you are a bank, financial institutions, or a insurance company. Then if your turnover exceeds 250 crore, your borrowing exceeds 50 crore. Then holding subsidiary wala drama that. So these are, if this criteria is satisfied, you will become a level 1 entity. Second criteria is level 2 entities, wherein your turnover exceeds 50 crore but does not exceed 250 crore. Your borrowing exceeds 10 crore but does not exceed 50 crore. Then level 3 entities, where your turnover exceeds 10 crore but does not exceed 50 crore. Borrowing exceeds 2 crore but does not exceed 10 crore. So these are limits for level 3. If you are neither level 1, level 2, level 3, then automatically you become level 4 entities. Why is this categorization done? Is because to give some exemptions. Correct. So AS 3, 17, 21, 23, 27 are not applicable for level 2, level 3 and level 4. Okay. AS 18 for level 1 and 2 it is applicable. For level 3 and 4 entities not applicable. To give the exemption, we have categorized the entities into 2. These things. These are all what? Non-corporate entities. Then corporate entities have been defined into 2 sectors. Non-SMC and SMC. If you are a non-SMC means you are a big company. For big company, it's the same limit as level 1 entity. Whatever is level 1 entity conditions you saw, if those conditions are satisfied, then here we call such a company as non-SMC. Non-SMC, no exemptions. For SMC, however, there are exemptions. So you can take it. Right. Then we saw upgradation and downgradation. Upgradation means happy scenario. You're becoming from small company, you're becoming big companies. If you are a big company, meaning if you become from level 2 to level 1, Then is exemptions applicable for you? A is exemptions now? No. Current year, you have to apply all the accounting standards. But should you have to revisit or rework on previous year data or not required? Not required. This is in case of upgradation. Another case in case of downgradation. Downgradation means from big company you're going to small companies. For small companies, is exemption available? Yes. But can you take it immediately or you need to wait? You need to wait, and you need to wait for 2 consecutive years and then take the exemptions. So that's all as a summary of things that we learned. Hardly 5-10 minutes and 2 marks. Good enough, no? Right? Yes. So just go ahead and revise the same thing, and yeah, that's it for today. Thank you.